Hi everyone, so welcome to another episode of Investing for Value. So I want to go through value and risk and how we should look at it. But first off, I'd like to say everything I say is for entertainment purposes, and if you need the financial advice, you should go seek a financial advisor. Alright, now let's get right into it. Alright, so I want to talk about risk and value because when it comes to investing, risk and value is like those are paramount. Like, if you don't assess whether a company has value, then what are you investing for? And if a company does have value, you got to ask yourself, can you unlock that value in a good way? Like, is it risky? If you invest in, say, like a nuclear power plant and it's generating great returns, but it has a risk that it's gonna have a meltdown one day, then is that a good investment? That's kind of like your that risk analysis where you go, well, it's really risky, costs a lot of money to build, but at the same time, maybe the reward is worth it. Like, not to say like nuclear power plants are risky or bad. I don't know enough about nuclear power plants to say whether they're great or good, or for the matter that they give a good return. Like, they're definitely better than burning coal, I guess. Like, it doesn't pollute the environment, produces a lot of power for everyone. But these days there's a lot more of a push towards renewables that focus more on solar and wind, because it's just good for environment and it doesn't cause, like, there's no uranium that's used and then it's radioactive and you have to find a place to store it after a while. You that stuff can't just be stored anywhere. You have to have special facilities for that, and that's a costly thing. That's like, you use it. First you got to refine the uranium, then you got to get it in there. You use it, then after that you have this cost that lasts for a lifetime in a way, because you got to have the storage facility. You got to have make sure someone monitors it. You don't want someone coming in and taking a bucket. What would that do? So it's costly. It has a bit of high maintenance as well. So that's the extra that you have to think about. Like, should you invest in it? But never mind. We're not going to invest in a nuclear power plant. But I will go through firstly. What really adds value to something, right? Like, what adds value to a company? The usual case is a company builds a product. That product is unique. It can, I guess, in a sense, like, you can have intellectual property. Like, if you build a certain product and it has a patent on it, then that's value. And if it's useful, then that also builds a value. You've got to look at, say, you build a product and it has to have a certain market size. Like, if we look at pens, like, if you had a pen, and everyone has to use a pen, that's a large market size. And say we have a patent on ink pens, which we probably won't, but imagine having a patent on ink pens. Like, no one else can produce ink pens. Everyone has to use a feather, like, and write like the old ways. So imagine that. Like, that would be a lot of value. Like, if you had a stock and that stock was a company that owned the patent for ink pens, that stock would be flying. It'd be one of the most valuable stocks in the world. But sadly, we don't have that. So, but we try to look at it in that sense that, like, how do we find basically a company that has a product that everyone would use or consume, and only they can make it. So, like, when you think about it, like, Coca-Cola is one of them. Like, that recipe of Coca-Cola, no one else is getting it, and they're the only ones that will be able to produce it. And after that, wow, we all like a cup of Coke occasionally, or a can, or whatnot. So when you think of Coke, you think, wow, that's actually, it's very similar to this pen. Like, they're the only ones that really produce Coke, and people have such a love for it that it's a very valuable product. And then we might go, oh, what else has that kind of, you know, intellect, that extra unique feature that no one else can copy? And we might look at KFC. That chicken has those spices and herbs that they won't reveal to anyone. Apparently, it's been revealed, so you can look online and find it. But the usual case is most people don't want to cook. The chicken is tasty and delicious, and there's no one else that's going to come in and try to open up their own KFCs to compete directly. Usual case, most people, if you want KFC, you go to KFC. You don't go somewhere else because, like, that chicken's great. Add it with Coke, and then add it for a pen, maybe, like, eat and write and drink. That's every writer's dream, I imagine. Why not? So in the sense of, we need to find products that are very unique, that no one else is able to immediately copy, immediately come in and compete. And those are the products you earn really good profits in, really good margins. And it comes in three parts. Like, you think about Coke, you have the product, which people love, but if they never labeled Coke and just sold it in, like, plastic transparent bottles, like, if people would still buy it. But if you add extra labeling, it kind of builds this extra powerful image, because the way we consume things is like, first we look at it, and if it looks good, we feel like eating it or drinking it, and then after that we consume it, and then we go, that's a real test, and then if it's good, even better, like, that's the, about two-prong approach of, like, most things, like, it's like a pen. It looks good and it's really practical. Coke is, it looks good, and, like, when we drink it, it solves our thirst and it tastes great. So you want to find products like that. And if you can find products like that, great. Yeah, I mean, basically, but I mean, those components can come individually. You can find a brand that is, that people will buy it because of the brand. Like, if you go to the YouTube section, Apple, and then read those comment sections, like, half of them are like, oh, you're just buying it because of the brand, because you're a bit of a fanboy, and the rest are like, no, Apple's, it's offering all these great values and all that, why would you want to, like, use something else, So, it's all debatable, what's good or not good, but at the end of the day, like, if you can find a company with certain products that build certain values, that people keep paying for because of that name, or that certain unique, part about that product that no one else can produce, you've got yourself a winner. And that's the thing, like, how do we spot these winners? And, because, like, they're good value. Sometimes it is up to you. Like, these are all independent opinions. So even though, like, I might consume a product, and then I go, is this product gonna be, is it gonna be popular with everyone else? If it is, then, you go buy it. Just like Apple, this is Apple generates this emotional part about us that goes, if it's an Apple iPhone, we kind of get this whole idea of, it's a luxury product and it's really well to use, but it's quite overpriced. So it gets, like, this luxury kind of pricing. And when you see people with iPhones, you go, wow, like, you're either, really, you've got the money and you've got a really nice product, and I envy you in some countries in terms of, like, people who have iPhones, they have a higher status. But in other cases, it's like, you hold an iPhone and someone's like, oh, well, my phone's better specs than you. Are you stupid to be paying overpriced, figures for what necessarily isn't as good as another phone. So we've got these arguments. So don't always get lost in noise. Don't it, you don't have to follow like all opinions. It's like this is a great pen, but like if 5 people think it's a great pen and 5 people don't think it's a great pen, well, it probably it only matters that 5 people think it's a great pen. It doesn't matter that the other 5 people don't think it's a great pen. As long as these 5 people are willing to pay me the price that I'm asking for, and I'm able to generate a great profit, that's value for a company. So all products will have haters. Everything has haters. Like this video will have lovers and haters. And that's the thing. Like that's just how the world works. And your goal isn't to find a company that everyone will love, because not everyone absolutely loves something. There's always something to criticize about it. That's where you have to look at it and go, is there enough people who love it to push this company into the stratosphere of value? Are they producing so much value that in the future your company will keep going? Like if you look at Apple, they're a great example of someone who produces value year on, year out, and then over time it's starting to dwindle. So you don't see the stock going multiples after a while, but like those are just examples. We don't have to say like Apple's just one of the really good examples because of the position it's built, and it's so recognizable as a company. But you can find it elsewhere. If you can have that, you can build your revenues and you have high revenue growth. So like that's also a thing, right? Time is money. So like the amount of time it takes you to grow to a certain size, that's money, and people value that. So if a company grows at 20%, it's more valuable than a company that grows at 10%, but it's less valuable than a company that grows at 50%. So you've got to judge it differently. Like a company that grows at 20% might have $1 billion in revenue, and a company that grows at 50% might have 500 million in revenue. But the company that's growing at 50% with 500 million in revenue, they might get a higher valuation. As crazy as it seems, why would they get a higher valuation? Because the whole view is that if a company is growing quicker over time, it would surpass the value of the other company. So that's more or less the case. So you want to consider what the value, where the value is and where the risk is as well. So it's a matter of, do they have a product and a name that's valuable? Are they gaining enough traction within the market where they're growing so much that they're saving you time? Because if it takes a company 2 years to do something, while it takes another company 1 year to do something, the company that takes 1 year is going to be more valuable. So it's a matter of time as well. And it's also a matter of like margins. If you can't earn good margins, then you can't really earn good profits. If you can't earn good profits, then there's not really much return to a shareholder at the end of the day. And that's the whole idea. Everything that you're investing into a company, your ultimate goal is that they get a certain stage in the company that they can produce these extraordinary profits that benefit all shareholders. And that's what at the end of the day, that's what makes a company valuable. Like a company could be losing hundreds of millions of dollars, but if it's gaining market share, people kind of view it as it's gaining market share right now. It's okay, even though you're losing a couple of 100 million or something like that. But in the future, that market share is going to turn to profits because you're going to increase the pricing afterwards. So it's a matter of like, how does it translate to profits at the end of the day? Like, it could always take longer. It could take like 5 years before you see profits. But if you're gaining market share like crazy, at the end of the day, that's what people see as value, at the end of the day, everything has to translate to profits, and that's how people value a company. It's all about those really good cash flows. So I really wanted to touch up on one company that people feel like is overvalued, but and then you have another camp going, oh, it might not be. So this is Beyond Meats. This was a company that initially was suggesting that the company wanted to go at IPO at between $19 to $21, between that value for an IPO. There was so much interest in the company that the company actually ended up pushing it up to $25 per share, which would have given it about $1.5 billion dollars in valuation. And the crazy thing is, 2 months later, after its IPO, this company was worth 100. It had gone up to about $180 per share, which gave it a market value of around 10 billion, which is insane. Like, you think about a $10 billion company, and let's go through those revenue figures. This year, Beyond Meats is looking at 210 million in revenue, and that's growing at about 140%. So it's growing at 140%. Then what is it going to be worth going forward? Are they going to be able to keep up those growth rates? Because if you're growing at 140%, and you can keep that up, then you're quite valuable. Like, even if you don't grow at 140% next year, imagine growing 200 million by 100%. Next year it could be 400 million. And if we imagine that it doesn't grow at 100% the year after that, and it grows at 50%, at 400 million would be 600 million in revenue. And this company could potentially be quite profitable, because at the 210 million revenue, they kind of expect just to be near the break even or profitable point. So if they continue to do more business, that economies of scale comes in, because if you think about it, if you open a factory, that factory has its base costs. Like, you don't escape the cost of the factory, the power, and then hiring those initial employees, but making more might cost a lot less because you're using less resources to make more. So that's why Beyond Meats might have a higher valuation currently, because everyone perceives it as being a company that can grow really quick, because it has a product that a lot of people value as being quite unique. Like, if you can make beef out of vegetable protein, it's at the end of the day, it's quite good, because there's always these health concerns of people eating too much red meat. So all of a sudden, if you can eat red meat, and basically still get that nutritional value, but not have the harmful parts of red meat, then it's actually not too bad. And also think of the vegetarians that love it. So there's quite a big market for it, especially worldwide. The question is, can these guys can they grow quick enough before everyone starts competing with them? Like, Beyond Meats has probably their next competitor is Impossible Foods, I think. Yeah, Impossible Foods. And also, one of their initial investors was Tyson Foods. They're also looking at entering the space. So after a while, that space becomes saturated, and it's a question of, can you build that brand? Can you build those connections, that supply chain? Can you build big enough that you have those economies of scale that allows you to compete on the forefront and beat everyone, continue researching and developing your product and make it better? And that's the question, right? So in a sense, if you look at the current valuation is about $9 billion, or around about $170, I think. Yes, about 170. It's extremely high from the initial pricing of $25. But the thing is, a lot of companies have taken it on. Like a lot of fast food places, if you go there, they sell a Beyond Meat burger. They actually can't produce enough to get out the door. Um, like there's so much demand for it. If you And that's the question of like how much do these guys produce before they actually satisfy the current demand? I've had their burger before. Like there is still a difference between real meat and Beyond Meat's beef patty. But it feels close enough that I would continue to eat it if it was available. Um, but a lot of cases is it's just offered on a promotional sense because there's not enough supply. It's not cheap enough to produce right now. That a lot of companies want to take it on because it really cuts into their margins. It's good for a gimmick because it's like um, everyone wants to try a new product. So you put a new product out, everyone's coming to your restaurant to consume that. But after a while, you start to go, is it gonna contribute to my bottom line? Like at the end of the day, it's profits. If the product doesn't contribute to your profits, after a while, you probably don't want it on your menu. So that's the thing. If Beyond Meats is able to get the costs quite low, which will cut into their margins too, but if they're able to increase the supply, it's better to sell more and earn less per patty than it is to sell less and earn a lot per patty. So it's better having the large part of the pie than a tiny slice of it's better having a tiny slice of the big pie than a big slice of the small pie. So that's more the sense where I see it of for like Beyond Meats. Like even though you're saying it's a 9 billion valuation, like it's probably a bit high for right now. But if we imagine in 3 years' time that this revenue figure is 600 million in revenue, and then we go, hey, what if these guys produce like what if they produce 45 to 90 million in profits? How would you feel about it? Like, and then they continue to grow because there's kind of like this part of for companies that they reach a certain stage where they're sufficient enough to expand and continue to build out that they can just outmuscle the competitors. There's always this point in companies that they have to reach. Currently, it's about survival. Currently, they don't have enough to sustain themselves, but usually when a company can sustain itself, reach profit, and be able to just continue competing, that's usually when they do really well. And that's the question: when does Impossible Meats get there? Like when does Beyond Meats get there? Not Impossible Meats. And how do we evaluate it? Like for me, I could give them a valuation of probably 4 billion, based on what they have. But 9 billion, it's forecasting a lot of growth. If that growth slows down, remember that time factor. If you take longer to do something, time is money, and also your competitor is breathing down your neck. So it puts the company at more risk if they're not able to grab the whole market for themselves. Like I don't think they'll grab the whole market, but maybe they will grab a good portion and become quite a profitable company. Okay, well, all right. Well, if you have any questions about that, like if you want me to go in more depth about something, particularly about investing, then let me know just down below, or let me know how I did. And until next time, good luck investing.